right, so let's say you're looking for a home loan. You're buying, maybe it's your first house, a different house, and you might be familiar with 30-year mortgages, but are there other products, other loan products available out there for mortgaging your home? So today I have with us John Wagner, the producing branch manager at Cardinal Financial. So John, what other options are there out there? Is it only 30-year mortgages?
Yeah, great question.
Thank you.
Thanks for having me. So there's a lot of different programs available, a lot of different terms. They're typically in 5-year increments. So they start Drew at 10, 15, 20, 25, and 30-year term loans.
Could people do 5 and 25 also? But not typically. 10, 15, 20, and 30 are the typical.
Correct.
Yeah.
Yeah. And it's worth noting, I had a client this morning that we're doing a 30-year loan, and I did the calculations so that she's going to end up with a 20-year result. So even though the term of the loan says that you're making 360 payments, if you pay X, you get the result, right? So she's actually going to make it a 20-year loan, even though she's taking out a 30-year loan by making the 20-year payments.
And are there advantages to doing a shorter or a longer term mortgage? So
Absolutely.
30 versus, let's say, a 10 or 15?
Yeah, great question.
Thank you.
So the longer the term, the more the bank's making. So absolutely take advantage of bi-weekly payments. I advise all my clients that at the closing, they set up half the payment every 2 weeks. So in doing so, they're making one full payment at the end of the year, thus shortening the term of the loan and paying less interest to the banks.
Wow.
Yeah, so definitely if you can afford it, a 15-year loan, you're going to pay far less interest than a 30-year. The programs to mention are some of the other non-traditional loans are variable loans. So you can do 2-year, 3-year, 5-year, 7-year ARMs that are still amortized over a 30-year term, but the interest rate itself is fixed for that period, 2, 3, 5, 7 years. So those are typically good loans for people that are going to have a higher projected income in the next couple years, graduates, doctors, those type of things that know that their practices are going to take off and they're going to be in a better financial situation than they are currently. So it's for each individual, it's an option that you'd look at. I'm actually doing a refinance for a gal that is at 11.5% on an adjustable. So she has taken the ride and it is adjusted every 6 months, and that's currently where she's at now. So if you don't refinance after that period of time, it can adjust typically to, there's caps on the loan which control the adjustment periods. There's caps that control the timing of how much it can adjust, so it's typically 1 or 2%. And then there's a cap over the life of the loan, which is typically 6 or 7%. So if you take out a 6% loan, it can never be 12 or 13%.
That's great.
Over the life.
That's really great.
So hopefully that's helpful.
Yeah, absolutely. Very helpful. All right. Thank you so much, John.
My pleasure. Thanks again. All right.
11%.
Yeah, 11.5. 11.5.